I have a confession to make. I like pancakes. So there it is, folks. Now you know my ugly secret. I like pancakes. Hey folks, in this video, I'm going to talk about what inflation has done to the cost of breakfast at home. Now in the description below the video, you can find a link to an inflation protection kit that will tell you exactly how to move your tax advantage savings into a precious metals IRA. In my opinion, that is the best inflation protection you can get right now. It's silver and gold. Now on with the video. Now I live walking distance from a Dennys, and so when I get a hankering for pancakes, that's my go-to spot. Only the last time I went, it cost me $16 for a Grand Slam, a cup of coffee, a tip, and taxes. It was $16. Well, I didn't enjoy them that much, and so I'm hesitating to do that again. But it made me think, is it still $16 or what would a Grand Slam and coffee cost me today? And so I went and looked, and well, here's today's menu for Dennys. $3.59 for a cup of coffee. Can you imagine paying $3.59 for a cup of coffee at Dennys? I can't. I mean, call me cheap. Well, I won't drink their tap water, but I'll drink nothing and enjoy it more than a $3.59 cup of coffee, and then $11.99 for a Grand Slam. And so with taxes and a tip, that's $19. My pancakes are going to cost me $19. I mean, are you kidding? That made me wonder. It's like, okay, let me find a Dennys menu from a while back, and so I can give you some kind of a percentage. I'm a numbers guy. I like numbers. I'd like to be able to tell you, it's like, okay, that's 30% inflation, it's 15% inflation, whatever the number is. And I couldn't find an older menu of Dennys, but this is January 2020. This is an article in restaurantnews.com. They're talking about Dennys kicking off this super duper slam. And actually, this was the Grand Slam with unlimited pancakes. And there's the price. It was $6.99. So in January of 2020, Grand Slam with all the pancakes you want to eat, which, however many that is, $6.99. And today it's $11.99. $11.99 for that same Grand Slam. Just crazy inflation. But we all like to eat breakfast, eggs, bacon, potatoes, croissants, muffins, whatever your food of choice is. We all like breakfast, most of us. And so I wanted to look at, okay, so we're not going to go to Dennys, we're going to have breakfast at home. What's that going to cost us? What has inflation done to our breakfast cost in the last year? And so we all like bacon, don't we? I mean, it's the other white meat, right? No calories in bacon if you're dieting. Yeah, just kidding there. And so here's the cost of bacon. All of the numbers I'm going to show you in this video are based on January 2021 prices. So since January 2021, the cost of eating bacon at home has gone up 27%. And what about eggs? I mean, you can't have bacon without eggs. It's kind of a standard breakfast fare. We all like eggs. I like them over easy. Take them scrambled with cheese, chop up some veggies in there. Good stuff. Maybe make an omelet. So here's the cost of eggs. Since January 2021, they've gone up 72%. Now, certainly cheaper to eat at home than to eat in a restaurant, but when we have 72% inflation in one of our key breakfast items, I mean, clearly it's costing more to eat breakfast at home. I enjoy having bread with my eggs, and so here's a nice looking croissant. Oh, when they're flaky, good stuff. And so here's what's happened to the cost of croissants and muffins since January 2021. They're up 12.5%. Now, I enjoy having some jams or preserves on my bread, especially if it's toast. Now, a croissant doesn't really need anything. It's good on its own. Here's the cost of jams and jellies. They're up 9.4% since January of 2021. And it's interesting in this chart, that it's not a gradual increase. It's a step function. If you're a geek, you'd call that a step function. So basically, it's a stair step. Price goes straight up and then straight sideways. Now, I'm assuming that that step function is caused by the producers of jams and jellies. They sat on the rising costs of the materials to make jams and jellies and only passed them on back in, middle of 2021. They decided to pass those price increases on to the consumer. And this is an excellent example of cost push inflation. That's when rising costs in the input materials of producing something get pushed to the consumer. Cost push inflation. Well, now, obviously, we can't have a good breakfast without a cup of coffee. And so let's look and see what inflation has done to the cost of coffee. 13.8% increase in the cost of coffee at home. Of course, that's nowhere near as bad. I'm blown away by $3.59 for a cup of coffee at Dennys. I mean, it's Dennys. Now, this is inflation in diesel fuel. Hopefully, none of us are drinking diesel fuel for breakfast. I don't think you'd enjoy it if you did. But this is part of why we're seeing such inflation in food. Everything that we get in the grocery store arrives in the grocery store on the back of a diesel truck. And probably before it got onto the back of that diesel truck, it went to some warehouse on a diesel train or on a diesel-powered cargo ship. So diesel fuel runs our economy. So all of the increases in the cost of diesel ultimately get passed on to the consumer. Again, another example of cost push inflation. What's interesting to me in this chart is that we have 7% inflation just in the last month. And I suspect that that 7% increase has yet to be pushed out to the consumer. And so we haven't seen that 7% increase in the cost of eggs or bacon or bread or jelly or coffee, but we will. Now, analysts and the talking heads from the U.S. Federal Reserve and the U.S. Treasury and all those kind of folks trying to tell us that inflation has peaked and is now backing off. Well, they're just talking. They either speak in the narrative or they don't know what the heck they're talking about. So I can tell you what we're looking at right now. This is a chart of light crude, which obviously that's where diesel comes from. Diesel comes from oil. It's a derivative of oil. Current price target in oil is $140 a barrel. We're at about 125 right now and quickly headed to 140. I believe that's about a 10% increase from this level, a little bit more than 10%. That 10% increase in the cost of oil is going to increase the cost of diesel, which is going to increase the cost of food. I mean, it's just pervasive. We are living in the worst inflation that we have experienced for 40 years, and it has not peaked. It is only going to get worse, folks. Now, I'm kind of having fun in this video. Although I really do have a hankering for pancakes right now. I'm not going to go to Dennys and spend $19 on them. That's just crazy. Crazy. But I want to make the point that inflation is serious business. If you haven't caught on yet, inflation is, I don't hesitate to say that it's eating us alive, but it's eating us alive. And it hasn't stopped. This is persistent inflation. It's going to continue and it's going to get worse. You need to protect yourself. You need to protect your retirement savings. You need to protect your food security. Buy a little bit of extra food next time you're at the grocery store. Every time you're at the grocery store, buy a little bit extra. That's what my mom did back in the 1970s. I used to go to the grocery store with her. I was a preteen. It was still okay to be seen in public with your mom. And we'd go to the grocery store and I'd see these canned goods. and they'd have 3 of the sticky labels. You know, that back when the dinosaurs roamed the earth, they actually put sticky labels on the canned goods, and there'd be 3 labels on one can. And of course, each label was a higher price. And so that was inflation in the 1970s. And what my mom did is she'd buy an extra couple of cans of, you know, a can of corn, can of beans, etc., and stack them up in the pantry. She knew we were going to eat that food. And she also knew that when we went to the grocery store in the following week, that same can of corn was going to cost more than it had last week. And so she was protecting against inflation by buying extra food. Now, if you have some money in your retirement savings or in your savings at all, I suggest protecting them with precious metals. Gold and silver, obviously in the 1970s, that was the place to be. Gold went from $35 an ounce to $850 an ounce. Silver started the decade less than $2 an ounce and ended up at about $48 an ounce by 1980. And so in the 1970s inflation, and there were a number of periods in the 70s that were actually stagflation, silver and gold were the place to be. Now, I believe that is true today as well. Silver and gold are the place to be. If you have tax-advantaged savings accounts, like an IRA, an eligible 401k, TSP, 403b, 457, pension funds, annuities, etc., all of those tax-advantaged retirement accounts can be rolled into a precious metals IRA. You can also buy physical precious metals with your after-tax money and store those metals locally. However it works for you folks, I highly recommend that you protect yourself from inflation. I hope that I've provided some value in this video. I'm going to go think about pancakes. I was having so much fun talking about pancakes and breakfast that I forgot to tell you about my inflation protection kit. If you look in the description below the video, you'll find a link where you can get free information about how to move your tax-advantaged savings into a precious metals IRA.